Talk about expect the unexpected. Why is tech at a record? This is a totally different playbook over the last 3 weeks, and all of a sudden we reverted back to what we've seen for the majority of 2023. Record high in the NASDAQ 100, and Guy and I just couldn't get our arms around why. So Ralph Schlosstein, Evercore Chairman Emeritus, is here to help us understand it. Ralph, it's so good to see you.
Why do you? It's great to be here on your very last day. I'm really sad about that. You guys are amazing together.
Oh, thank you. Tell
you
your
friends.
Really
are. And well, I'll tell anybody.
Okay, good.
I'll tell the entire audience.
Thank you so much. We do appreciate it. We are definitely sad to be parted, but it is good to have you on the last show. So what do you think about tech?
Well, I think if you look back over the last 10, 15 years, when new innovations, new technologies have come into the world, the market in the earlier days has consistently undervalued them. Look at how Google traded. Look at how Meta traded in their early days. Look at how Netflix traded, even though we all thought they were highly valued and perhaps even overvalued. And I think the market has become accustomed to, particularly in periods when risk is valued, in reaching from a multiple point of view and a multiple of earnings point of view for these high growth and really strong market position companies. But it's still
Ralph,
scary.
What does it say about... Well, okay, so why is it scary? Does it remind you of 2000? Does it remind you of a previous era? What is it that scares you about this?
No, I don't think we're at the world of 2000. I mean, you looked at some of the companies then, there were companies that had literally no earnings nor any prospect of having earnings, and they were valued at multiple $billion. I remember looking at a company that's a terrific company, Cisco, and in 2000, it was valued as if it would capture 150% of the router market.
Wow.
So, that's just not possible. And I don't think we have that kind of froth in the system right now. If you look at the multiples of the Magnificent Seven, in large measure, they're fact and earnings based, not hope based. And so, the overall valuation of the market is not, it's not cheap, but it's not way stretched either. And as rates have come down, the valuation has become a little more reasonable.
So if I said to you that the Fed's going to cut 7 times this year, buying tech makes sense?
Well, I don't believe that's going to happen.
You don't? Okay, what do you think is going to happen?
So don't tell me that.
What do you think is going to happen?
I think the market is over expecting interest rate cuts by the Fed. And by the way, if we did have 7 interest rate cuts this year, that would be a bad thing, not a good thing, because it would be the reason they would cut that much would be that they're seeing real weakness in the economy and that the employment part of their dual mandate was at risk. And we don't want that. What we want, and certainly what the Fed is hoping for, is a continued reduction in inflation without too much erosion in the strength of the employment markets. And, if you look at 2023, you'd have to give the Fed a pretty damn good grade for what they achieved. If you were sitting here in January of 23 and said we would end the year where we're ending now in inflation and employment and unemployment, everyone on the planet would have said, sign me up.
Yeah.
So.
What do you want to own in that kind of scenario? If we get a soft landing, if the Fed can deliver and continue to deliver an economy that is seeing full employment, we've seen the claims numbers this week, they're stunning, and sees inflation coming down. We've just seen the University of Michigan numbers come in as well. Consumer feels good, inflation is coming down. What do you want to own in that kind of scenario? Is it big tech, or is this the environment in which the market should, in theory, broaden out?
I'm a believer that at some point the market does broaden out. There are a lot of great companies that are actually trading at discounts, and in some cases significant discounts to the market multiple. I think small and mid-cap companies have been left behind a little bit. And I think that's, particularly the case when you think that small and mid-cap companies tend to have a little bit higher proportion of their sales domestically in the U.S. And the U.S. economy is clearly the outperformer. The trend, and I'm not sure I necessarily am a huge supporter of this, but the trend is definitely in more trade barriers, less flow of goods and services across the border. That's something actually that should benefit the Russell 2000 relative to the S&P and the NASDAQ 100.
So does that mean that if I'm at the Fed, that it's a possibility that there won't be a landing, but that won't necessarily mean the Fed's going to have to hike or that we're going to see a massive acceleration?
I think the probability of the Fed hiking at this point is very, very low.
But we could not land. Things could just bump along okay.
Yeah, I mean, if you ask me what do I expect to happen this year, I think inflation continues to drift down much more slowly than it came down in 23, but the general trend will be positive. And, the range of, I guess recessions are judged by GDP growth is, down a little bit to up to 2.5%. So it's a pretty narrow range unless we get a serious exogenous shock, and we've had some which haven't really affected the market. So I think you can never be totally relaxed on those things because we never see them before they happen. But in the absence of that, I think the band of activity or expectations for the economy this year is relatively narrow. It's not very exciting.
Ralph, what's going to be most...
I know, we're trying.
But Ralph, you look at the year ahead, there's plenty of potential for excitement. You've already alluded to what is happening in the Red Sea and some of the potential shocks that could come from there. But let's fold in politics here, U.S. politics. We're heading towards an election at the end of this year. Donald Trump is polling very strongly. It's a coin toss in terms of what the polling is predicting at the moment as to who will be the next president of the United States, were it to be Biden versus Trump. I know you've got some skin in the game here, but is that going to be the biggest factor here in terms of the way that U.S. markets trade this year? What happens with politics rather than what happens with the Fed?
That will certainly be a big factor. As you look back historically, election years have generally been positive years for the market because the Fed tends not to try to make sharp moves during those years in support of one or what that would be viewed as support of one or the other candidates. And fiscal policy tends to be on glide path during election years as well. So I think the election certainly a factor. I'm a lifelong Democrat, but way down the list of things that concern me about Donald Trump are that he's a Republican.
Right.
I'm concerned that way before I'm a Democrat, I'm an American, and I believe in our institutions, and I'm shocked and appalled that we have a candidate representing one of the two great parties who doesn't think there was really anything wrong with January 6th, who doesn't really believe in the peaceful transfer of power, who doesn't believe that we should be supporting Ukraine in what I think is an existential battle for the democratic West. And I think those things are, in my view, terribly threatening to our democratic institutions and to our role in the world.
And for market participants, impossible to price. You can't hedge that kind of risk. It does, though, seem that no matter who is in the White House, we will see more spending. It's a matter of where the spending may be, and with Trump, there'll be tax cuts in a particular way. Well, how do you think that winds up playing out over the medium term? There is no cap to spending anymore at all.
Well, I think we have a spending and a taxing problem, both. If you look at the percentage of the GDP that is U.S. government spending, it has gone up a little bit, not a lot, and it has gone up a lot less than the percentage of GDP that goes to federal tax receipts. So we have a serious deficit problem in this country. We have a serious fiscal imbalance. And at some point, that is going to come home to roost, and it's going to come home to roost in a pretty ugly and unexpected way, in my humble opinion.
Yeah.
But the solution to that is, unfortunately, we have a Republican Party that doesn't really act with much fiscal restraint and cuts taxes all the time, and a Democratic Party that certainly doesn't act with much fiscal restraint and is fearful of reversing the tax cuts that Republicans have made because they're very popular. So we're not in a great spot.
Do you think you could get does Liz Truss have a lesson to teach America?
Yes, you can't have a policy that's not in some way moored to the general economy of your country and the world. That's a pretty good lesson.
Or do you just basically need a lot of, like, one big pension fund in one part of the market to move it? Because you can make that argument. We've seen that lots of times, and it hasn't had the same kind of effect like we saw with Liz Truss last year.
At some point, Ralph, does the bond market say enough?
At some point,
we're done. You can't keep doing this.
Yeah, I'm not predicting that's going to happen this year or next year. But if we continue on the path that we're on right now, at some point, there is going to have to be a major adjustment in our fiscal policy, and that will most likely be precipitated by the bond market, because the bond market actually tends to discount future problems or issues more quickly than the stock market does.
We only have about a minute, but I'd love to get your take on where China goes here, because no matter who's in the White House, it feels like that decoupling, de-risking will not go away.
Yeah, I think first of all, I don't think you can blame the decoupling and de-risking primarily even on the United States or the West. There's been a pretty dramatic shift in the leadership of China and their attitude toward free and open trade, joining the world order. And you see this if you talk to 100 companies that have global businesses and have businesses in China. They'll all tell you it's somewhat different. And so some of what we're experiencing in the United States and in the West is a reaction to that. Mm-hmm. And some of that is, just pure politics, in the sense that you would have to search really long and hard to find any meaningful leader in either party who wants to stand up and say, we really need to reverse course on China and get closer.
Ralph, for the last few years, Alix and I have really appreciated your time and your wisdom. Thank you very much indeed for today. Thank you very much indeed for all the other appearances as well. Ralph Schlosstein.